Good morning, everybody. Yasin, Mike. What's up, what's up, what's up? Alright, so we have core retail sales and normal retail sales. Whatever the difference is, I'm not too sure. Looks like the core retail sales forecast is going to be a little bit more. Let's see what that is. Auto sales. Oh, okay. So auto sales, but they tend to be very volatile. Distort the underlying trend. Core. Alright, so that's auto sales. I don't know why they just don't call it auto sales. It's kind of weird. And then they got retail sales. I'm assuming is normal retail. Yeah. Alright, well, depending on what happens, that's kind of going to determine, spending habits or, whatever it's going to track. We'll kind of see what impact that's going to have. I don't think it's going to be too crazy. Something to keep in mind, we have the federal fund rate and FOMC tomorrow. Alright, so that's going to be pretty insane. I would not be surprised given the fact that the start of the week has went aggressively to the buy side. I wouldn't be surprised if they punish them and use FOMC and the federal fund rate to smash against what's been happening, which has basically just been like a straight, movement to the buy side. It's just been, one-sided. There's been little to no retracements. There's been two small indecision candles within the string of what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. 10 days straight. 80% of the time, prices finished higher. Turn this thing off real quick. Turn that freaking heater off. It's freaking hot. Okay, hot. Okay, Mike said core retail sale exclude auto, gasoline, building materials. Interesting. I didn't know that. I did not know that. All right, so yeah, we'll see kind of like, what they want to do. I don't think it's going to be too crazy because tomorrow is what it is, right? So we got the federal fund rate. So we will see what that leads to. If it is going to be bullish, what would smart money do? Right? What would they like to do first if they are going to end up going higher? Well, if we think of power 3, if we think of the fact that they like to victimize liquidity or neutralize liquidity or pair up the opposing side with whatever move they're trying to partake in, I could see them again dumping pretty aggressively just to basically sweep up orders and then just continue to go higher, right? A little bit later, right? It would make sense. So we'll be on the lookout for that. Again, our bias and narrative has remained bearish DXY, bullish indices, and for another week, pretty much another whole month up to this point, we've been able to be correct on the higher time frame and know where it's going to go with decent amount of conviction, right? When price has been slowing down or having conflicting signals, obviously we have highlighted that and we've operated within that as well. I've done it both live and then of course just stating my opinion on Sundays. And yet again, the record still continues of us being right week to week, month to month, and at this point, quarter to quarter. At least the first 3 quarters, we've been able to be in front of what the market overall narrative is. So I see that continuing, right? There's no reason it shouldn't. We are in some volatile times. We do have a lot of things happening across the world, so we're gonna have to keep tabs on that. Make sure we're not oblivious, like we talked about on Sunday. But yeah, unless something changes, nothing changes. We're going to continue to want to see this go higher for the currencies. We've been correct overall. It's basically smashed many liquidity pools we've been watching. Previous week's high, monthly high from July. Is that a monthly high? It's just a previous week's high. This is the monthly high for July. So going back to the liquidity mapping list that I talk about, right? Monthly high, previous month's high, previous month's low, previous week's highs, previous week's lows, previous days highs, previous days lows, right? Since we're bullish, previous days highs, previous week's highs, previous month's highs have been targeted. All right, so again, in this case, I do feel that we'll continue. I'm not sure if they're going to stop. We're real close, but if they want to stop and give a rejection real quick, and then maybe set this up as a bullish breaker, I wouldn't be surprised. I don't see them breaking down below this new day opening gap. Only way I would be bearish overall, changing the narrative, would be if price gets down below these levels. I do have the weekly order block, which is also, from this perspective, a bullish breaker. And then we got the weekly inversion fair value gap that's been holding price. So these levels we've been talking about should hold price. And have they been doing that? Yes. Have we been correct in that assumption? Yes. Right? Has it served us for our confidence to continue to go higher? Yes. Right? So hopefully it makes sense why we have been trusting this to go higher. Because it's already taken a significant buy-side liquidity pull for GU, we may see price turn a little bit, go against it in anticipation for tomorrow. Or if it just continues today, or is an indecision candle today, tomorrow will be the time when the market decides to blow out another significant high. In this case, we have this high for Euro. We have a fair value gap up here. The price may look to run into for GU. So in order for a higher time frame level like this or like this to be met, most of the time, not all the time, but most of the time, it's going to need some type of news event, because the news events act like macros on the higher time frame delivery, right? Higher time frame levels, big trending moves require institutional sponsorship, and the news events schedule out institutional sponsorship, right? So I just want to make sure I give you guys a reminder. If you like the stuff that we do here, if you get value, if you've been with me for a while, and you support the channel, definitely don't forget to like the video, subscribe to the channel. It does a lot for the channel to be able to reach more people just like you. And yeah, it's much appreciated. Let me see the chat. News gives us volatility, absolutely. Institutional sponsorship. DXY tapped into a lot of liquidity. All right, let's go. Start with what we look at. So we got the yields still looking like they may want to continue. This looks like a pretty obvious target. Will it shoot straight to that before giving some type of retracement? Maybe. We got equal lows here too. All right, you can kind of see if you look closely. We got relative equal lows. I do think that we will get down there. We do have a chance for it to like retrace because it hasn't really done much of a retracement. It's just been a very bearish week. We have this low, this low. You notice how it hasn't even came back into that at all, really. It's kind of just hit this and then just kind of continued to push lower. So we'll see if that's going to continue. And then maybe blow this out fairly quickly. But yeah, it's pretty set up to run the risk of like one more retracement. We do kind of see SMT here between these two. We got the highs here, failure to get above it, failure to get above it, and we have this running above, right? So this is like a normal retracement. So we definitely are favoring this going lower, obviously, right? This just completely fell out of bed, which we were anticipating, right? If the rate cuts are going to send price higher in the indices and currencies, it's going to be positive for those assets. That is supported by downside in the yields. A rate cut is specifically cutting this. It's cutting the yield, how much lenders get when they're lending out money, right? Whether it's a mortgage, I think it may slightly affect credit cards and the interest allowed there. I'm not entirely sure. I could be wrong. But it's interest, right? And for the most part, things like home loans and stuff like that, mortgages, car loans, so on and so forth, those will most likely be the things that are impacted by a rate cut. And if money's cheaper, that stimulates the economy. So it's positive for business. That's why the stock market would rally and DXY would fall. Because it's cheaper, right? So yeah, we'll see if price can get up here. If it doesn't show any signs of that, we do have a bearish order block. Okay, so we'll watch the bearish order block there. Time frames daily, do daily order block. And then we could see that we are inside of a monthly fair value gap. And then we also have this monthly fair value gap. So this monthly fair value gap will probably keep price below this, right? I don't think that it's highly likely for them to want to get up above that before they take this out. It's been respecting it, so we're going to assume until proven otherwise that this is going to respect it and then look to continue its decline. The week has been a bit shaky, right? If you could see the gray areas that's highlighting Sunday. So this week, it's been a little bit sideways. We may stay like this because we need institutional sponsorship. Maybe the news event in 4 minutes and today's price action can get us down there. And then maybe as a result of the FOMC and rate announcement, maybe it decides to retrace as a result of that. These are just some scenarios that could play out. Overall, this is all under the assumption that we're going to continue to go lower, right? But a retracement is not out of the, off the table, I guess you could say. So we got to make sure we're watching for signs of potential retracement, like displacement above this high or just displacement through this order block midpoint, because then that sets the stage for us to potentially get up here. But unless that was to happen, I'm going to just assume that this is going to continue to hold, either consolidate or give a displacement, attacking the lows down here. And then we got the lows here on this asset. Take the fib, break this down into quadrants. Okay, so we got 50%. 75 and 25%, and then the full closure of the monthly fair value gap. So these are going to be dynamic levels that act as potential support and resistance. So we're going to want to keep attention to that. We're at, what is it, the 25%. Notice how it's stalling out, right? So it's going to be reactive. It's either going to hold it or it's going to use this order block in conjunction with that 25% level of the monthly fair value gap to hold and then push price through the lows. This is my objective for today. We'll see if we can get there. And if this is going to go lower, DXY should go lower, indices should go higher. Simple as that. And the bonds, they're doing the opposite, right? So that's supportive. We have buy side up here, fair value gap up here, new week opening gap up here from a couple weeks ago, a couple months ago, back in March. So it's in close proximity, so that's why this is potentially important. Things from months and months and months ago, when it comes to new week opening gaps, new day opening gaps, if price runs into something that's been done before, like a new week opening gap, you want to make sure you're aware that that's in the area, because that'll give you further context for the responses that you see and the behavior you see, and sometimes justify or negate a particular idea. Right, so yeah, we'll keep that in mind. Notice the reaction. Again, I wouldn't be surprised if they do want to try to retrace or just consolidate ahead of the news tomorrow. Maybe today's news in 2 minutes, or 1 minute now, maybe that's used to trigger in a response away to fool people into thinking that we're topping out or bottoming out here. ahead of the news that's coming out that'll most likely be used to send us down here and potentially up here. Right, we got this wick here too. It's kind of interesting. So you see the 25% level, it's respecting pretty nicely. So we'll see if that continues, right? But hopefully this makes sense here. DXY again is still going lower. I wouldn't be surprised if it pulls back, right? We have swept out and delivered exactly what we talked about on Sunday, as is usually the case. So we'll see if that continues. Because it swept a low, we're going to see how it behaves on this daily chart below this low. Are we going to quickly get back above it and close above it? If it does do that, then we may be set for price to attempt one more time to stall out and retrace before it makes that secondary run to even further sell side liquidity. We're at the bottom of this quarterly fair value gap, which is a 3-month fair value gap. It's being pretty reactive, you could see. If you didn't have this level here, you wouldn't really understand really why it's doing that. Maybe you could see this fair value gap, right? But that's kind of in conjunction with the overall like higher time frame PD array being the quarterly fair value gap low. See, notice how we got back above that? We got to really pay attention to what that's going to do. Is it going to continue to pull us back into that? Or is it going to end up closing back below it again? And then, continue the run. All right, so the likelihood of a retracement, obviously we're going to have to fill this out until the 6:30 time to see if that's going to be the case. I wouldn't be surprised if they do retrace using the news that just came out to pull people in, and going into the 6:30 open, the actual New York open, we see price maybe give a reaction from this order block, or something to that effect. We do have a low here, high, lower low. So this down candle, this last down candle, should be able to act as a bearish breaker block. Right, it's also a large wick. So we got the 50% of that, as you could see in here. So those are all levels of reaction. We have this down wick here, so if it was to pull back into it, we don't want to see it break through that. And that's still a healthy retracement to then continue to go lower, because that's what the overall sentiment's been for the last couple months. And it doesn't change just because we get a retracement on the 1 hour or even on the daily, right? So we're going to stick to that, continue to put on full display the ability to hold on to your narrative and why. And just the simple fact that it doesn't change on a day-to-day basis in terms of narrative. Bias does, right? Bias could be retracements, it could be consolidation, especially if we blow out a low or a high on the higher time frame or hit a PD array. So those can trigger in moments where price kind of stalls out and starts to fool a lot of people, get them to give up on what direction they're aiming at. But that doesn't happen here, okay? At least I try to get you guys to remove that type of thinking, right? Because we hold on to our narrative, and it's for the last 9 months served us very, very well. For me, the last 3.5 years, almost 4, I'll be feeling like I know what's going on, right? So yeah, with that being said, hopefully it's clear what I believe on that. Again, we got the currency still looking like they may want to continue going higher. We'll see if a retracement's in the cards. Any retracement is just a retracement identified to continue going higher, unless we were to break down below something like this, right? Because if we get down into that, we're breaking through multiple PD arrays, fair value gaps, swing lows, order block, up wick. So if it was going to go higher, we'd expect that stuff to hold, okay? If it doesn't hold and multiple are being violated, that's a problem. And it's not something you want to push your luck in unless it was to do something like this again as a result of that delivery into those levels, okay? So we'll continue to try to see this go higher, right? Again, we have this previous week's high that's really close. We have a monthly bullish order block, if I'm not mistaken. Yeah. So we'll see if that can hold and give some type of energetic response. We are pulling back into it. So I'm going to assume that this will probably be the line in the sand. I don't think it'll go beyond that. And then we'll start moving higher again potentially unless of course today ends up being a retracement day or indecision candle day because of the news that is coming out tomorrow. Right, so yeah. And yeah, Mike, the news did hit, and it's triggered in a response away from the bullish narrative. So we'll see if that's just a retracement. Then again, we got the DXY pushing lower here, getting back above this low. We'll see how long it wants to do that. We'll see if it wants to give us a retracement here. It wouldn't be unreasonable for them to give a retracement. And then of course, what would you target? You'd target each one of these lows. All right, we'll see how it treats this. Remember, we're never in a rush. We're going to wait for time to align. Just because you see your model, if it's outside of the time elements you've been taught, you're basically gambling. Because just because you see a pattern for pattern's sake, that's not what makes things effective. It's the conceptual context ideas that wrap around what it is that you're trying to see price do. That's something that most people miss, right? They'll find a model, a pattern, and they'll think that it's because of the pattern. Yeah, this whole run higher, you got to think about what the psychology has been throughout the week so far. People are running higher. They're thinking they're missing things. FOMO is at an all-time high because the market is at an all-time high. And, you know, it's going to use that against people. So you don't want to be used and abused psychologically, because it's kind of what the market wants to do. Yo, what's up, Daniel, bro? For many that don't know, Daniel's actually the one that introduced me to trading, by the way. It's good to see you, brother. How many models are you currently looking for when entering trade? So at this point in my trading, I use 4 specific models depending on what is taking place. But yeah, generally I try to narrow it down just by looking at, like what is happening. If I could see a breaker, I'll probably use a breaker. If I don't see a breaker, I'll default to the 2022 model. If I don't see either of those, I'll use some form of a continuation, maybe institutional order flow entry drill and balanced price ranges, or obviously it's also encapsulated in market maker buy and sell model ideas. So if I can't see any of those other things, I'll just wait for a market maker buy or sell model on like the 1 minute, and then try to catch one of the phases going into a fair value gap. So that's kind of like all the stuff that I think about. And if I'm taking an execution, it's going to be based on one of those things. And I'm, obviously trying to mention what I'm executing on at that time. But yeah, for the most part, if it's outside of that, I'm not taking a trade. Like, I'm not executing on mitigation blocks. I'm not, well, maybe because they're similar to breakers. But I'm not, anything outside of that, I'm not executing on because it's just not something that I've really messed with. Doesn't mean I can't see things like volume imbalances or any of these other things. I just prefer to use the things that I've gotten used to. What times do you prefer to enter a trade? New York. Yeah, New York session is my main session. I only trade for 3 hours a day, max. From 6:30 a.m. Pacific Standard Time to like 8 is generally when I cut things off. I'm obviously up earlier, so I could kind of answer questions and kind of go through things and get a feel for what the landscape is. But generally, the first 2 macros from 6:50 to 7:10, 7:50 to 8:10, those are generally the times when I would want to enter a trade if the model's showing, if one of the models is there. If I see a model that forms within the macro and I miss it, I have no problem getting in a little bit later into the macro, like into the 7 o'clock time, which is also obviously a silver bullet time. But that it's critical that a move is observed basically starting in the macro if I'm going to take something outside of the macro. But for the most part, I also consider taking trades if it's available 5 minutes before or 5 minutes after a macro. Kind of just depends, kind of like what's really there. Hit during the preferred time. Yeah, we got a little bit of time, right? Alright, so let's go back to some of the other sessions, right? So this is something you guys can go ahead and do as well in your own trading. If you think what I do here has been helping you, this helps you build that muscle memory. Okay, like for example, this is a beautiful example, right? Yeah, I guess it is a decent example. So if you think about the 2022 model, okay, this is the first macro of the day that I like to look at. It's the most unreliable, but this is a good example, right? Because there's a fair value gap in here, if I'm not mistaken. And right there, that little baby fair value gap. There's a run on stops in a time when I'm expecting bullish price action, which I called this as a buy live with my private group yesterday. And then we also talked about this one as well, right? But this is an example of what I'm talking about, right? If you had like a inversion fair value gap is something I use as well at times. But you could see that this is an inversion fair value gap forming ahead of the macro. But the potential setup, if you're going to use this inversion fair value gap as your model, or the YouTube model in here, right? Run on stops, shift above the high, fair value gap left, stop goes below the fair value gap low that created the fair value gap. But you could see how it forms, taking stops, the contextual ideas form going into the macro. Okay? Sometimes it'll happen a little bit later. Sometimes the move will happen, and then you see the move happen, your model's there, but you miss it. What do? Right? You think about all the other things that I've talked about that get you into continuation variations of a model and levels that hold, like up wicks in an up move, okay, or even down wicks that get traded into that respect the midpoint. Fair value gaps, order blocks, okay? Because if your idea is correct and you get in front of something that's going to move, that's been proven that the model showed and you're correct on bias and narrative, things like this become more effective, catching order blocks that form, wicks that form, fair value gaps that form. Right, that stuff becomes effective when you have the conceptual ideas behind you and proof like this that it's going to deliver, and you're in line with the higher time frame narrative. But when it comes to identifying the model and using the macros, depending on what model you have, obviously it's going to obviously vary. But this is a good example of the 2022 model. Okay, within a macro. This is a macro that I don't like to execute in. Like right now we're going into the 550 macro, but sometimes it operates and delivers pretty nicely. But most of the time, the 5:30 time, anytime before the 6:30 open, the New York open, AM session open, a lot of times you get caught up in moves that will stop you out, manipulate you, but then you'll end up seeing that you were correct on the day. Right? That's one of the risks you take when you're executing this specific time in the market for this macro. This is the most common macro that happens in. That's why I say it's the least reliable. It happens sometimes, right? And when it's there, we're able to get in front of it. But sometimes you'll take a loss. And, is it worth dealing with that? Maybe later it will be. But is it worth it at the beginning when you're trying to learn? I'd say no. Right? You might as well stick to beyond the 6:30 a.m. Pacific Standard Time. And the two macros I just mentioned at the outset of this conversation, be in the 650 to 710, 750 to 810. Because that puts you in the silver bullet window, and then it also kind of organizes things. Since it was fairly earlier than you'd like, would you still get into that order block at the 6:15 time? Yes, because this here is also a run on stops within a narrative. This is very important, right? It's within the narrative that I was looking for, right? It was not upsetting the narrative at all. This high to that low, for those of you that may know, what is that? Once we get up above this high, what is that? This high to that low, once it delivers above that, those of you that have been with me for a while, what do you see here? What would I say this range is once we get above that? Maybe those of you that are in my private group remember what I was talking about with it. I think the order block is correct. I think that is an order block. But there's a specific thing. Rolling BPR. Exactly, Mike. Exactly. Hitman, exactly. BPR. So that's what would have given confidence to this. I believe I called this as a buy as well. Those of you in my private group, tell me if I'm wrong, yesterday. But yeah, it's a BPR. It's an order block. It's also a bullish breaker. All those things align with this. So to answer your question, Daniel, this would be something I'd consider, even though we're outside the macro, because it, for one, started the move. The overall narrative, it delivered a move, right, based on the model. The overall narrative is correct. And we have other structural, conceptual ideas, like this being a balanced price range, supporting the idea, continuing to go higher. And we had targets up here that weren't met just yet. And I mean, look at the explosive move that we got ahead of. I didn't even realize it went this big because I get off when we're done, like at 8 o'clock, and I come back, early the next day. So that's incredible. That move ran an insane amount from where we called the execution. Shoot, whoops. How big was that run? Over 200 handles. 300 from that move that we got ahead of. Of course, I have my rules. I didn't hold for that huge amount, right? I could have, should have, potentially, in some people's minds. But, this is how you know that we're in line with the narrative being correct. No, I didn't. That's definitely something that, if I'm being honest, I'm trying to improve upon, leaving runners. But it's very habitual that I catch a certain amount and I get out, because that's what's allowed me to be successful, right? It's allowed me to be consistent and take a lot less losses, right? And be able to, get in and consistently knock down a consistent amount regularly. And it's kind of removed the feeling of, I should have got more, or just the upset feeling, or unsatisfied feeling, right? And I'm trying to, obviously, like I said, combat that. So I should be leaving runners. I mean, the biggest move I called this year was 1,300 handles, which is literally insane. I caught the high of a move early on in the year. I think it was in March, where the tariffs were being talked about, and it went 1,300, and I was able to catch 236 points. But man, if I would have just kept a runner on, right? So shoulda, coulda, woulda seeps in. But then I always bring myself back to the fact that, we got rules, and what's got me to where I'm at is by just taking specific amounts and not tinkering with it, But again, as I improve and get to higher levels, and things become more accurate, which I've proven this year for 9 straight months, which has been pretty insane to even me, I think it's been time for me to start trying to leave runners on, And, I like being honest about the things that I can improve on, because it could seem pretty mystical how we're coming out here every single day, week, month, quarterly, knowing where price is going to go, So I'm not perfect, and it's very important that you have a mentor or listen to someone that is humble enough to say where their weaknesses are. Because if not, you're getting sold a dream that's going to hurt when you realize that it's not true. That there's more to it, that there's ups and downs for everybody. So I get you, but hey, yeah, exactly. If it's not broke, don't fix it. If it works, it works, and just stick to it. We don't go to our jobs, right, and think, oh, I made this amount of money, but I could have made this amount of money, and then get frustrated about it. You just go, get your check, you know what it is, and that's just, it is what it is. You got to treat trading the same way, because it's very easy in an unlimited environment like trading for us to get in our own head and have the wrong mindset. And then that wrong mindset over, like being a little bit exaggerated in our expectations, that could lead to problems. That could lead to you just not being satisfied about the 20 to 30 points that you just made continuously. You'll need more, you'll want more, or you'll be unhappy. And that becomes a problem, because then you'll push harder, you'll overtrade to try to make it more, and that's not required. 20 to 30 points is plenty. And you need to make that habitual to the point where you have a habit of taking down consistent things. It's easier. I'm sure we all can agree on this call that it's probably a lot easier to make 20 to 30 points consistently than it is to make 100 plus points a day, right? So with that being a reality that a lot of people don't like to submit to, wouldn't it be a better decision to just take down 20 to 30 points, or at least get good at that first before expecting these crazy goals? You have to cross one bridge to get to the other. So you might as well enjoy the cross through that first bridge while you get better at your overall analysis, so then you can ease your way into those larger moves. And like I kind of pointed to, you're not necessarily going to need it. Like those massive runs, it's great to grow into that. But if you never caught over 20 to 30 points ever, but you can take 20 to 30 points on a pretty regular basis, that is more than enough. Because once you scale up in your lot sizes, if you get more capital, if you get more funded accounts, if you just get more confident in things, you're able to scale that 20 to 30 points. Instead of being 20 to 30 bucks, it gets to 200 to 300 bucks, like 1,000 to 1,500 bucks, and so on and so forth as you increase the amount. And a lot of people kind of discount that. They disregard that as a fact for God knows what reason, and to their own detriment. You know what I mean? But yeah, so like I was talking about earlier, in terms of what we're trying to see price do, we want to see if DXY can continue to drop. We're obviously monitoring what's going to happen here. It has been very bullish. The start of the week has been very, very aggressive. Are we going to set a high of the week and then decline ahead of the news tomorrow? Because that could be something very, very possible. Because everyone's on a high right now because we're at literally all-time highs. So you got to keep that psychological element in place and understood, because if it does turn around, we got to be prepared and ready to adjust if we are going to look to counter trend trade. Counter trend trading, obviously, we cut our risk by half, or whatever, right? You could cut it by 75%, depending on you, obviously. So you just got to think about it. I cut mine personally by half. If I'm counter trend trading, I put most of my leverage and effort into the higher time frame narrative direction, and just the way it is. Right? Obviously, those of you that have been here for a while, we trade both sides. We could do both sides. We can adjust. When we're wrong, we quickly get back in line. So there's nothing to be concerned about. And even if you didn't take any counter trend trades and you just stuck to the bias and narrative that I point out, you can be very fruitful, and it kind of puts another layer of limitation on you, so you don't put yourself in bad situations. Again, it's not the most sexy thing to hear someone say, but again, I'm not here to blow smoke up your ass. I'm here to tell you the truth, the reality, and sometimes People don't want to hear it. Those same people also don't want to blow their accounts. So, you kind of got to consider what's being discounted, right? So yeah, if we do break down below this, prove that this is a bearish order block by delivering into it and then rejecting pretty aggressively. We do have somewhat relative equal lows. We have lots of sell side in here. And then we have this 1 hour fair value gap. So that may end up being a target if it does refuse to really do anything in here to the upside. I'm going to assume that we're going to go to the upside, right? Until proven otherwise, we stick to what direction we've been following. We do have to consider the fact that we have basically quickly got up here and it's only Tuesday. So will this turn into a market maker sell model that targets these equal lows ahead of the news? Possibly, right? I think that from here up to the 6:30 time, and then depending on how the open delivers, that'll give us a lot more assurity as far as whether price is just going to continue going higher. When we're at all-time highs, ICT has mentioned that you do not look to counter trend trade because you're basically trying to pick a top. Picking tops and picking bottoms becomes a problem. It's very inconsistent because you don't know, just like how anyone else doesn't know. And the people that do know, they're not here putting it on a silver platter telling you what it's going to do, aka the smart money people that run the algorithm, right? They're not here telling us what to do. So we have to wait for the algorithm to tell us what it wants to do by showing us what it's going to respect, what liquidity is reactive, and then what levels are going to be holding versus the ones that are going to fail. Right, so yeah, we got to wait for time. Things are delivered on the basis of time, then price. That's why we wait for the macros. That's why it's important to find your models performing in the macros or at least close to them, or having a move at least start in a macro, right? And then gauge things beyond that, right? Because we got to let time form, then price. Time obviously is kill zones, macros, the month, the day of the week. That's all time. And then price obviously has to do with liquidity and PD arrays. Simple as that. All right, PD arrays are insignificant if they're not aligned with time. All right, so yeah. If you guys have never heard that before, hopefully that's valuable to you. It was definitely valuable to me. Yeah, so the liquidity that we have available, we have previous day's high. Okay, previous day's high. It's also, as you can see, London's high. Guess we could just put it as London's high. Actually, let me go. I think I have it. Do I not have it labeled already? It's kind of strange. Give me 1 second. I hope you guys had a good weekend, by the way. Let me see. Mike said there's very little institutional interest in price delivery for now. Yeah, and the reason being why that is a true statement is because of the rate cut coming. Everyone's waiting to see what happens. It's very, very dramatically important what's coming tomorrow. And most people don't realize what's happening because they don't look too deep into it. This is very, very, very important for the remainder of the year. Because if you cut interest rates, that's going to give people interest to buy homes, to buy things, stimulate the economy. It's going to encourage companies to borrow money to expand their business and make more business. You know, so it's very important. It'll stimulate investment into the U.S., into our bonds. into just the U.S. economy in general, right? Like I said, did we gap up because of contract change? Oh yeah, that's another thing. Whoops. I appreciate you mentioning that, because we may have to actually switch. I almost forgot. Would have remembered sooner or later. Thank you for the reminder, Mike. Yep. Okay. So now you see that the open interest has now shifted from the September contract to the December contract. That's how you know it's time. Time to change. Whoops. December contract. Sorry about that. I totally didn't even remember. I was doing so much stuff this morning, I freaking forgot. But yeah, if you guys haven't done this so far, you need to go do this right now. Like as soon as possible. Because now everything has changed. Okay? The interest and liquidity has now shifted. You see how this low was taken in this Nasdaq chart, but the other one did not take that low? There's already differences taking place because the money has moved. Right, or at least started the adjustment. So yeah, make sure you guys go do that before the open. There it is. The bonds and yields, I have the continuous contract. I don't trade them. I just use them for sentiment, like narrative analysis. So you don't got to really worry about that. DXY2, if you don't have the futures contract, I have that, but even with that, I use a continuous contract. Then, of course, we have the continuous contract for these as well, so we don't got to worry about it. So yeah, very, very important stuff here. You gotta make sure that if you're trading futures, you're trading the right contract, because there's going to be discrepancies if you're not, and you don't want to deal with that. Yeah, hopefully the sentiment and what we're looking for makes sense to you guys that have been here. Now we're just basically gonna wait. Right, this is a pretty nice reaction here from DXY. So let's see. Short brokers up. What the hell was that? We got another news in 15 minutes. We do? For USD, we don't. Well, it's probably like a yellow folder. Maybe it'll be something that does something. Not too sure. It's a yellow folder, Mike, right? Not sure how impactful it's going to be if it is. But yes, appreciate you, Daniel. It's about freaking time, man. Oh man. All right, let's see what's gonna happen here. SMT between on the 15-minute. Let's go check real quick. Yeah, we do see the SMT. The thing is, we have SMT at the highs up here too. So we have a cracking correlation. Oh yeah, I seen that with your AI stuff. If you guys want to get deep into AI, Daniel, that's your guy. Absolutely your guy. Go check out what he has to offer in the AI space. He is a freaking savage. Right, so yeah. Alright, since we now have to replot things, we see that DXY is continuing to push here. It's kind of just range bound, but yeah, we'll kind of see how it wants to continue to react here. Again, we have a low here. May not be super obvious when we're on those lower time frames. We've got a low here, and then we got lows below that. So we may look to reach into that. Again, we're waiting for time, right? It's the most unreliable macro is the one that we're currently resting in. Okay, so we got a wick here that looks like an immediate rebalance to me. It was an immediate rebalance for GBP. So, and we've come off it very quick. So that's pretty telling that things are probably going to continue unless it was, of course, to break down, get down below this fair value gap. In that case, it would then try to target this. But we're going to stick to the narrative being, this as a bullish delivery. We got this wick here, so it may not even need to come down into that. If that respects this fair value gap, leaves it open, creates an immediate rebalance, and we just continue to push, that is a highly bullish market. Okay, so we will make sure we're pushing in that direction. All right, so we got this. Got a fair value gap here and a fair value gap here, so I'll just kind of couple those together, make it its own range. Let's see, so we got the 1 hour. Do got this candle here, so we'll see how this wants to behave. Oh, Daniel, were you had something to do with AI too, right? I saw you were doing some stuff with AI. Started people seeking out. Yeah, that's awesome, bro. Daniel's always getting into something. For those that don't know, this man's definitely got the heart of an entrepreneur. Okay, so yeah, we got this 1 hour order block. So yeah, price can't even get back into this area up here. May end up being a problem. Instead of actually coupling those two together, I'm actually just going to use this one here. Mind you, if this is going to top, excuse me, if this is going to top out and give us a strong rejection, maybe even reach into here, it's going to have to stay below these levels. And if it does, and it displaces getting down below here, this will act as a rolling balance price range, And then we should be able to continue to watch price at least get down into here. And we would like to obviously see DXY, you know, rally, if that's going to be the case. But we're just going to have to wait and see. For now, it looks like it is delivering here. I think Yasin earlier mentioned the potential SMT that we can kind of see forming here. Got the daily candle, looks like it just made a wick. So we'll see. Bullishness, it's not unreasonable if this candle was going to be something that looks to target downside, but we'll see as we get a little bit more into the session. The S&P has an order block, fair value gap. We got a high to low, right? So the middle portion of that should not be getting traded through if it is going to continue to hold and push us to the buy side. Right, if these levels hold, say we break through it and then we break back above this fair value gap, that's a beautiful sign that we're going to continue and target this high up here. For now, we're at all-time highs, so we're not picking tops, and we're not going to force anything to go to the buy side either, right? So, see, oh, okay, yeah. See, I knew you were doing something with AI, bro. The AI agents are awesome. Been hearing all about that stuff lately. We're different businesses, but decide to niche down to my downside. Okay. I'm happy for you, brother. Yeah, yeah, we're just going to be sitting on our hands. Just wait. We're going to see how price reacts to this fair value gap and how it treats this low here. Let me see. Mike did appreciate the subscription, whoever that was. But yeah, this could be a breaker, right? Like I said, you know, if it breaks down through this and closes below this, if you take that breaker as well, depending on how it reacts there, that'll create a BPR, similar to what we were talking about over here with the Nasdaq. If it breaks down below this, it may actually create this as a rolling BPR as well, and then possibly target something like this. That would not be unreasonable. But again, if we want to see that happen and have that be trustworthy, DXY is going to have to get in shape or get in line, I should say, and also do a rejection as well. But again, we're in a moment where time is very important. So remember, anything before 6:30 can end up being manipulation, especially for the indices. A lot of times, the high or low of the day forms beyond the 6:30 time window, right at the open. Sometimes it, needs to open up a little bit, get into the open, then set the high or low of the day. A little bit different to currencies, which almost always set the high or low for the daily range in London. It's a little difference in the indices because they are an American asset, so they run off of American time. Right, so yeah, we will see what that wants to do. Let's move up a little bit. We do got a fair value gap down here too, and down here. I think this is one that aligns with this over here. I think this is that upper fair value gap, yeah. It definitely is. Yeah, we got this fair value gap too to watch. We'll see if it could come down into that, and then whatever it does from that level would be pretty significant. If it was to displace and get below that, we could watch this as a potential inversion to set up the retracement maybe down to here. And mind you, that would be happening ahead of the news tomorrow, so the news would probably use this level or wherever it finishes at as support potentially, maybe a wicks all the way down to here. Who knows? The rate cut's going to be very, very dynamic. So we're going to be there to watch what that does tomorrow. I guess not. I guess it's going to come later in PM session. Maybe we can, maybe we'll do an AM session call and then PM session here on YouTube. I'll do AM with my private group and then PM session on YouTube. We'll see what I feel like doing. We'll definitely keep our eyes on it though. So, but yeah, so with the Dow, you can see that there's this fair value gap. We have kind of got below it, so we'll see. Let's look at this low here. So this low aligns with this over here. So there was SMT at these lows here too, and at these highs. So when you have two SMTs, you want to make sure that you're using the DXY and the bonds and yields to help you justify which one, especially if it's on the higher time frame, like above the 1 hour, it helps you justify which one should be more probable, right? Nothing's ever perfect. Obviously, we're in a game of probabilities. But probabilities become a whole lot more apparent in a positive light when you're observing SMT when there's two and you're using the DXY and the bonds and yields relationship to help justify. It gives you kind of like a X-ray view of what's really going on within the two SMTs that form. So just something that is pretty useful for me. Yeah, I'm gonna go out on a limb and actually draw this in. Because how price behaves here is going to be impactful, whether this low is going to be targeted or if we're maybe going to invert this. If we get above this breaker candle here, it may use it as an inversion. Breakers can be inverted, for those that may not know. And if it was to do that, then obviously it could be a scenario that sets up to go higher. Yeah, we have seek and destroy for the whole week so far in the Dow, so it's unwilling. You could see the impact of what waiting for the federal fund rate has, right? You could see the impact on what it does in the market, you know, and what happens when the bonds and yields consolidate, right? When they're just not moving, you know, that sends reverberations through the different assets. Obviously, sometimes it'll still open up. For the most part, though, the relationship that the bonds and yields have, the impact that the bonds and yields have on the overall market as a whole, especially for U.S. markets, I mean, it can't be understated, you know. And a lot of people don't look at it. They want to just look at the indices and that's it. But I absolutely encourage you to not be so close-minded about it. It's very, very helpful. It's honestly, I can go out on a limb and say it's the reason I'm as accurate as I am. It's the reason I have so much conviction behind what you guys see me present. You know, it's because we're not just using one asset. You know, we're using a multitude of assets that give you the full sentiment of the market and then just a deeper layer of confirmation. You know, and then it just, the results speak for themselves. Coming out here every single day, every week on YouTube, every day in my private group. And we're just accurate. And I have a lot of my private group students on the call right now, pretty much always. And if I was not being honest or truthful, and it wasn't the way that I'm saying, they would come out and call me out. And it'd be embarrassing, right? But I put myself out there because I believe in what I do. And, you know, my students are getting good results. And of course, ICT deserves a lot of the credit, pretty much, you know, most of it. But when it comes to your own engagements and the things that we do personally without anyone else's help, we deserve the credit, you know, and it's specifically accredited to what it is that we do, right? With the bonds and yields and the way that we do things. Haimon just joined. Perfect. What's up, bro? What's your bias? So since you're a little bit late, in a nutshell, for those of you that may have hopped on late, we're looking for potential downside in the DXY, upside in the currencies. So far, it looks like that's what's going to be the case. We do have to make an allowance for the possibility for price to maybe reject ahead of the news tomorrow. So that is a possibility. That makes today a bit more risky because it's a day before a giant news event that's going to be heavily impactful for the rest of the year, which is the federal fund rate. But we're looking for this to potentially continue. Maybe there's a retracement before it sets up. Maybe it reaches down to here. Doesn't look like it. We got this wick here. It's basically stopping it because that's a balanced price range. This fair value gap overlapping with the wick. We also have the order block. But if this is going to go higher and DXY is going to go lower, and we want to see the yields go lower and the bonds go higher, we're going to want to see the indices also favor at some point price going to the buy side. So that's what our initial opinion is. Okay, and we'll see obviously closer to the open, which we're about to head into. We'll see if that's going to be continuing to be our perspective, right? If it's going to continue to stay that way or not. And no worries, brother. I appreciate your support lately. Appreciate your interest in the channel and what we do. Hope you've been getting value. Any of you guys that are new, hopefully you guys have been getting value, whether you've been here for a little bit or for a while. Obviously, those of you that have been here for a while, I mean, it becomes more apparent every single call you get on because it just keeps happening and happening and happening. It just keeps happening, So it becomes pretty apparent what we do here is pretty amazing. And, a testament to how amazing ICT concepts are, truly. How blessed all of us are to have access to the information that we have access to. I mean, it's unprecedented. That's for sure. It's becoming boring. Mike, that is the greatest thing I could ever hear you say or see you type out. It's absolutely amazing. It should be boring, right? And because we're so systematic and it's just over and over the same thing, hopefully all of you guys see it from a boring lens at some point, because that means that you're getting closer to desensitizing yourself. It's always going to be exciting in some way, right? It's going to be empowering, especially when you're able to do it on your own and you just come here to hang out because you like the community and maybe you want to share value, right? But I don't want you guys to be tethered to me forever. That's why I teach the way that I teach. That's why I don't give signals. I give signals, but I don't give them in such a hugely obvious way. Like, hey, I'm going to buy here, guys. I'm not a financial advisor, so legally I can't do that without the risk of being attacked by the Commodities and Trade Commission or whatever, if they were to catch me. But I give my opinion. I say where it's going to go. Generally, it does that. And you plug and play your model within whatever I'm teaching or bringing your attention to. And that's kind of how we have the relationship here when it comes to signals. Some people don't like it. Some people can't stand it. And, they want me to just trade for them for whatever reason. But it's not going to happen, And what I do, the way that I run this call and how I deal with my students, I've seen the results that can be achieved. I have a student, I always like to give him his flowers, but my student Harley, he's traded for less than 2 years. He's been with me for a little bit over a year, and I think, if I'm not mistaken, he had a $10,000 month. And this guy, he's not even 21 years old yet. So I mean, it shows the difference in everybody, right? We all learn at a different pace. But him and many others are testament to, being able to transfer this information. And the way that I do things, although it's within ICT concepts, it's unique. It's unique to the way that we organize the tools, right? We have our own system, just like how you guys are going to have your own system as well. And you're afforded that ability when you have a mentor that's not shoving you into a mold. Like ICT gives us that gift. And anybody on the internet that teaches ICT concepts or supposedly teaches ICT concepts and tries to get you to be forced into their mold, I mean, most of the time the students are going to fail at a very high rate. You know, here in this community, you get the freedom that ICT affords all of us to basically pick your own model. You know, I have 4 different models I use. I talk about different other models like inversion, fair value gaps, and you know, many other things, wick, midpoints, you know, all different types of things that can get you into a trade. And whatever you resonate with, that's what you're going to want to stick with, because there's continuations for everything. But I give you the ability to have that personal effect, so then it becomes a lot more exciting. And then eventually when you get to where you're trying to go, when your understanding of where price is headed and, you know, risk management and all these other things are secured with your time you spend here, you're able to then have a customized personal experience, and it's you can go much further with that rather than someone forcing you into their own perspective. You know, here you're given the tools to be able to build your own. You know, just like how ICT has given everybody the ability to do that with his concepts, I think his students, if they teach, should also afford that, which again, you're afforded here. So I think that may be why the results here with the students that come to me it's a pretty high success rate, or clarity is achieved in a pretty dramatic rate, you know. And I think it's because I allow a personal approach, and I give you the tools for bias and narrative. I give you the tools to build clarity, and then once you have clarity, and once you become more experienced, you're able to then get to consistency. And then it's up to you from that point on to become profitable. It's not because of me. It's not because of ICT. Because there's things that we can't control, like impulsive behavior, lack of patience. You know, there's rules and things that are taught to help combat those things. But at the end of the day, those are always going to be things that are a variable in students. And it's most of the time the deciding factor, you know, behind whether someone's profitable using a clearly profitable system or not, you know. And of course, you know, your upbringing, how you think, are you a negative or positive person? How do you deal with loss? You know, how do you deal with being wrong? Are you able to be positively critical to yourself to improve? Are you patient enough to go through to weather the storms that this industry will put upon you on your journey to, you know, achieving what you're trying to achieve? You know, all these things are variables outside of technicals, which is why there's such a high failure rate. Even the best of the best traders, if they tell you like what they're doing, or if they prove like we do here and like ICT does and a handful of others, you know, even if they teach it to you, there's still failure. And the reason being is because of those variables. And those variables are most of the time mitigated in many ways through rules and just simply hopping on and hearing someone's perspective and how they think through things. So then you could be influenced to think through things in a more positive, more productive way, and make the adjustments that are required for you personally, right? So, but yeah, that's kind of what makes us different, you know. It's also probably part of the reason why some people don't enjoy it, you know, because I'm not like a lot of these people that just give you signals. I want you to learn so you can provide for your family and not have to feel like you're tethered to someone. Can you show me the platform used to trade on, as well as recommended fund? So the platform, obviously my platform is this, and I use Tradeovate. Doesn't matter what, well, I don't use TopStep anymore. Obviously, I'm not going to get any more funded accounts through them, aside from the one that I already have, the 2 that I already have. Because if I try to get another one, Tradeovate is now removed. They're not allowing us to use Tradeovate, so now you have to use their stupid, shitty platform that's always having problems from what I've been able to gather. And then they also will charge you $135 for data once you become a funded trader with them, and they move you to a live account. You're going to have to pay again when you can come to TradingView and spend $7 a month and get all the data you need. So it's like they're trying to add on a fee. So they're being sneaky, and it's put a bad taste in my mouth. So you want to use Apex or My Funded Futures. Those are the two that I recommend. They're the most trader friendly, most scalper friendly, most overall friendly from what I've been able to experience. And FTMO, I did hear. It's unfortunate that they won't give me my fucking account back. It's so, yeah, oh God. That was the worst experience I ever had. I had $400,000 in funding with them, and I was killing it. I had $60,000 withdrawal ready to go. And they literally banned me from trading with them because of regulations, and they took the money. It was a loading withdrawal, and they denied it because, we don't serve U.S. clients anymore. It's so pathetic. It pissed me off so badly. And it could have been a time when I could have lost all interest and hope in being able to trade. I was going through so much, and luckily I was smart and withdrew most of the money that I was accumulating over the year I was trading with them. I've emailed them recently asking them, can you please give me my account back that you stole, and give me my withdrawal that you basically stole as well? Like, why is that not a possibility? And I haven't got a message back. So FTMO, they do accept U.S. clients. They have, I think, changed their rules to be competitive. It's not any longer 30 days that you have to pass it, which is another thing that was so difficult to pass that. And then once I got it, I was doing well. I ended up getting the boot. And then all of a sudden now they're accepting people again. That's my bad taste for FTMO. They were an amazing company when I was with them. So, it's going to be up to you. I love their platform, right? The way that they have things organized is absolutely amazing with the dashboard. It's like, similar to Top Step, right? It's a very beautiful platform. But yeah, those are just some of the things that have pushed me away from those two. That's not to say that you shouldn't go with them, right? Apex and My Funded Futures, those are my two at the moment. But yeah, if I was to recommend any, I've had good experiences with both of them. So, and again, they're really trader friendly. If you go on ChatGPT and you search up what's the most trader friendly prop firm, you can see ChatGPT even says Top Step is absolutely ridiculous. Another thing that makes Top Step a bit ridiculous is, and something I learned recently, was the fact that if you get a express funded account, so you pass the funded situation and now you're working on getting to being funded with live funds through them, or becoming a live funded trader, which is the next step that they force you into, which I didn't know. If you say you make $1,000 and you're like, okay, I made $1,000, I'm going to withdraw because it's my money. I want my money, right? And especially if you just passed and you're trying to withdraw. Well, you have the buffer that remains, like I think it's like $3,000 buffer that remains. It's a trailing drawdown. But if you have $1,000 or even $500 and you withdraw half of it, because that's a rule, you can only withdraw half, that buffer that you had is sneakily taken away. So now instead of having if you withdraw 500 from 1,000 and your risk that you have that's available is 3K, when you withdraw 500, it should be 2,500 left over for the trailing drawdown. But if you do that and you're in an express funded account, the first withdrawal you do, you now only have what's left in your account that you have in profits for your stop. So instead of the trailing drawdown, it becomes what's left in your account. So if you lose the money that's left that you made in profit, you're now going to lose the account. So it tightens it up even further. So I don't know why they don't make it more obvious that you need to focus on growing your buffer with the physical profit you have before you take a withdrawal. Otherwise, you're going to be cut. That's a totally retarded, just malicious rule to have. I think it's totally pathetic. You know, I've had to slowly push my way up, right? Because I didn't realize that. And normally I just, I've had decent amount of profits before, so I didn't even think nothing of it. But when I had $1,000 in the fund account that I just passed live with you guys publicly, I had $1,000 and I withdrew. I was like, fuck it, whatever. And I did that, and then I realized, like, wait a minute, like they've made it so now I have to be extremely cautious and use like 1 micro to slowly grow it up again. And I'm like, dude, that's pathetic. I didn't notice it before because I was, pretty deep in profit, so I didn't really. I still had the $3,000 buffer. But now with this recent one, I've discovered that, like, whoa, like, wait a minute. like that's a rule that I have to let everybody know about, because that's insane. Especially if someone just passed the funded account and they're trying to, withdraw, because it's your money. Why would you not be able to withdraw it? And if you withdraw it, why would you get punished in that way? But that's what they do. So, and then also they've now removed the ability to use any other platforms, meaning you can't trade on TradingView anymore if you get a new funded account, right? Because they took away TradeAvate and whatever else, because they're trying to push you into their platform only. They're trying to, lock in their clientele only into their services. And then they are also charging you $135 for data now, when you can come to TradingView and trade on TradeAvate and pay $7 a month. They force you to get every asset that you don't use. And I feel like they're just siphoning money off of that. It just looks malicious to me. That's why I'm never going to take another funded account in TopStep. I'm probably going to trade that account maybe twice a month. And all my focus is on my personal account, which is generally the main focus anyway. But then also growing my Apex portfolio. See if I can get up to 20, or at least 5 or 10. Yeah, every other funded account, like My Funded Futures or Apex, you can trade using other brokers. It's only TopStep, and I think that's going to be detrimental to them overall, because their platform is not that great. The one that they've created, they just added a bunch of rules to help you stay within their retarded rules, tools to keep you within their stupid rules. And they use the excuse, it's to help traders become better. And it's like, no, you guys are just ridiculous. Like, you're trying to make it hard. It's like a wolf in sheep's clothing. But, it's obviously just my opinion. But yeah. So yeah, with that out of the way, let's kind of go look at what is happening in here. We do got this first presented fair value gap. Whoa, that was weird. So we've got the first presented fair value gap. Let me make sure my broker's up just in case. All right. Okay, so drop down to 5 minute. So yeah, we've got the regular trading hours gap that was created. Let's see how we treat this. If DXY continues to tank, remember we have that level that we're reaching for to the downside. Where is it? So okay, it's already kind of met that sell side liquidity there with the DXY. Kind of scrub over here real quick. Yeah, so it's already kind of swept that out. We got this low to that high. We should not have to come back to the middle portion of this. So it should be able to hold that, continue as a balanced price range. Buy side taken, sell side taken, broke through the low. This should be a bearish breaker too for the DXY. Low, high, lower, low. So we should not have to fill in this, and we should be able to see this turn around at some point. We have a cracking correlation here, so it's a very low probability. We've got the Dow rallying. Looks like we have and no SMT, but we definitely have a shaky correlation right now. It has broken down below this, so we do got to watch this. Like I said, we're going to watch, is this going to hold as a bearish breaker? Since we're at all-time highs, it's more risky because we don't really have anything to reach for other than this high. And the likelihood of a retracement, given how aggressive it's been all week so far, and the prior weeks, there's been little to no retracements. So the likelihood of a retracement is there. So you could see those two factors being at all-time highs and the fact that there could be a retracement because there hasn't been much of a retracement recently. Those factors plus the news coming out tomorrow, that kind of shapes the condition that we're in right now. So what does that mean? Does that mean you go in there and be fearful, right? Does that mean you go in there and get scared and just, be struck by fear? No. It just means that you have to lower your risk. And if you're going to engage, your model better be there. And you better be within the proper timing. Right now, we're not going to use anything to get into anything. We're going to let the 650 macro come, let this kind of open up and prove to us what it wants to do. Does it want to hold this breaker, trade into it, and maybe start to displace away, and then maybe DXY starts to rally, supporting the down movement? Or going into the macro, is it going to start delivering through this breaker, use it as an inversion level, and then start to push us up so we could target this high up here for a buy? Same with this too, right? So these are things that we're going to watch for, right? We do got that first presented fair value gap. Looks like it's pretty much smashing through it. If you take the overnight first 30 minutes, which is something that we like to do. Not sure why some of the indicators aren't popping up. There it is. Okay, so the first 30 minutes of the overnight range. Take the high here to the low. Let me see. Let's get the low there. Okay. So mapping this stuff out is important, because if we stay below these levels, the first presented fair value gap, we stay below the first 30 minutes of the overnight range. It's from like the open to the first 30 minutes. And if we could get down and stay below the regular trading hours gap, which I don't know why it's not showing. It's like glitching right now. So oh, there it is. Yeah, so if we stay below these three levels in here, and if we also stay below the overnight equilibrium, those are all indications that price is favoring going to the downside, right? Especially if there's a reason on that higher time frame for us to do so, which we kind of laid out. There is a possibility for that because we're at all-time highs. We've been rallying aggressively recently, little to no retracements. We have the news tomorrow, so it may look to set up a down movement. So then tomorrow's news that comes out, since it's a positive news event for the economy, cutting the rates, which would drop the yields, rally the bond market, and then decline the DXY, and then result in rallying currencies and rallying indices. A downside movement, if it's supported by those three levels, and we can make an argument for it, it could be rational to engage. Again, we're not going to just assume that right now, especially when we see the currencies rallying here, basically supporting the run higher. And then we also have we had a sloppy correlation in here with these. These are kind of doing whatever they want. The DXY is kind of, it's still going lower. So again, there's very conflicting signals happening. So with that being the case, you're going to definitely want to wait for the time element, that being the macro, the first macro going into the silver bullet window, to play out. And again, we're being patient. We're just going to let price move. We don't worry about missing setups because we always have continuation variations. The whole important factor is figuring out where it's trying to go. We are seeing this decline in here. It's been really aggressive, so this is not a surprise that it wants to decline into this level. We're going to see how this treats this. If we close below this and use it as resistance, I'm pretty confident that the rest of the day we may look to slide, maybe even reach into this. Right, but again, we're just going to have to let price print out a little bit. Again, we know the risks because of tomorrow. It may cause today to be chaotic. We also have that, what was it? I think it was a order block in here. Okay, we could see that it's had pretty strong respect to that. So the only way that I'm personally going to be interested in trying to involve myself with a buy in this scenario is if we can close above this gap and we can get back above this swing high up here. That'll set us up for a 30-minute run on stops, shift in market structure, confirming that the state of delivery has now changed and the retracement's over, and we could then reliably get in line with the bullish delivery, targeting the buy side up here. Otherwise, if this is left, this may end up resulting in further decline. We have relative equal lows down here. I think, Haimont said Asia lows. I think that is definitely a reasonable observation. So if it was to respect this, and DXY was to basically rally, right? Say it breaks down, respects this, and then goes lower. With DXY rallying, that puts us in position to target this. But not only that, we could also look to target this too. These are relative equal lows. For me, I don't have enough in here to try to justify that. May be wrong, right? It may just completely melt and I won't be a part of it. But I'm in a mode of trying to feel things out. We're 5 minutes before the macro now, so something's going to have to change, supporting price going higher within the next 10 minutes. Otherwise, it's going to continue to drop. We do have this breaker we have to watch. This is another reason why I won't be trusting this too much, right? The signals are conflicted, right? Another scenario I wouldn't be surprised with is if we take this out and then look to displace, because that'll basically be targeting previous liquidity, right? We do see how this has basically been turned to an inversion, and like I said, that order block has held. This is something I wanted to watch and see. One thing I do want to say is if this is something that you heard me talk about earlier and you are trusting that, I don't want to sway you, right? I'm giving you my opinion, obviously, what I'm watching, what I'm not comfortable with engaging. But if this here was something that fits what it is that you do, I don't want to pull you away from that personal feel, okay? I'm just in a mode of waiting personally, right? And I wanted to see how this was going to behave. Now that we've gotten below this and it looks to be respecting this, if DXY breaks above this breaker candle, that'll, in my opinion, open up for price to want to potentially reach down to this level. Right? But again, we're still pretty early. We'll see what transpires here. We do got relative equal highs up here, but that's just basically submitting to the fact that this low to that high created a order block, which again is a BPR. That's why it seems like it hit a brick wall and didn't really move, right? Moved to the buy side, it moved to the downside here, respected it. All right, and we got the 50% of the order block here on the 1 hour. So yeah, we'll see what this wants to do here. We've now gotten below the open. All right, we spent a little bit of time above it. Now it's kind of displaced. We do have a bearish daily candle so far, reaching into the previous candle from the previous day. This 1 hour candle here, you can see the wick, which is here, opened, rallied up, and declined. So far it's a bearish power 3, and we're basically attacking this regular trading hours gap, right? So yeah, what Haimont said earlier about these Asia lows, it's definitely something we can consider, especially if we were to see this continue and break outside of this breaker block. It doesn't look like that's going to be the case at the moment. It looks like it's respecting that. If that respects it and then drops, that does not help support us looking for a short in the indices. It makes it less trustworthy, right? Doesn't mean it's not going to deliver, but again, you got to live by rules. And if certain rules aren't in alignment based on your method, the things that make you make a decision, you have to really, really reflect on what it is that you're doing. Whether you're going to execute or whether you're willing to accept that risk. And if you accept that risk, you can't be upset if you take a loss, if it ends up being incorrect. When the signs are showing you that things may be unreliable, especially ahead of a news event, especially ahead of like a holiday or during a holiday or even a day after a holiday, right? Some of these scenarios you have things that you have to do that are very similar, right? In terms of thinking. Because the risks, you've got to be able to analyze the risks. And this is just what it is. All right, so yeah, we're watching this, I think that's a 1 hour fair value gap. Let me see, 2 hour, 3 minute. It's a 4 hour. So it's a 4 hour fair value gap. And then again, like I said, obviously, this is a counter trend move. So if you're taking a short, regardless of what your justification would be, if you felt like you want to take a short, your risk should be cut in half. If you're going to take my advice in terms of mitigation and risk management. And I'm sure you guys can kind of work out why that makes sense to do that. Right. So yeah, if we can get price to get above this 4 hour fair value gap, turn it back to another inversion or a reused fair value gap and doesn't really want to support going lower, that'll be my trigger to then try to target this up here and see if I can find my model within that on the lower time frame, like the 1 minute or seconds chart. So yeah, we do have a little bit more of the regular trading hours gap that's available. Right? If we go to the regular trading hours, you can see that there's a little more available. Right? We do have this high to that low that's kind of delivered, but we have a void of liquidity in here. Right? So it's having to go back down and like a paint roller, right? Roll back over the empty spots. So now we got that displacement targeting that exact low that Haimont talked about earlier. The Asia lows. So yeah, let's see what the response is going to be. If DXY continues to drop, let's see what the response is going to be here once it takes that low. If it takes that low. So yeah, just looking at the other three together, definitely at this current moment does not favor anything pushing to the buy side. And that's a good thing that we're able to confirm that. And the only way that we'll be able to get back in line, this breaker obviously held up as well. I'm not sure if it delivered into it. Yeah, I guess it did. But yeah, so we'll see if it's going to continue to support this. We got a bearish order block here too now. So you want to make sure you mark that off, because if it returns into that, that may set up another short. We have this little gap in here for the S&P. So we may be headed to that. Holy crap. Freaking hiccup. So we got these lows here that are potentially in jeopardy. We got this gap in here on the 8 hour. That's definitely something to keep in mind. Seems like that's what it's reaching for. And again, this could end up being very short-lived, right? We do got a positive news event coming. Okay, so this could be a short-lived scenario setting up for what's to come. That's what makes counter trend trading risky, especially if you're taking a counter trend trade against the higher time frame narrative, because it literally could just be setting up. And if you're not aware that that's the case, this big down movement on the lower time frame may make you feel like, oh, we're declining, the world's going to end, and all you're going to be looking for is shorts, disregarding the fact that the narrative on the higher time frame is still bullish. This is why it's so important to stick to the higher time frame. This is why what we do here is effective. And sometimes you got to wait. Like today is a point in time where I personally needed to wait, and me waiting put me outside of the realm of opportunity, right? Because it delivered really quickly, right? But yeah, so and like we talked about at the beginning too, the likelihood of this being a retracement day is pretty likely, right? But it wasn't likely enough for me to just assume that that's what was going to happen because we were in a bullish narrative. So we have to allow price to prove it. My brother in the chat said he took 20 points. Beautiful. Beautiful. That's an example of independent thinking, right? The things that I've laid out to you is basically getting a feel for what's available on the battlefield, you know, and you got to make your own decisions. Just like if you were in battle and war, you would have to obviously make your own decisions to neutralize a target or not, you know, to protect yourself or not. You know, it's not always going to be your commander's call to pull the trigger. You know, to give you the strategy, you know, how you're going to move forward, how you're going to navigate so you don't get popped, right? But at the end of the day, it's going to be the weapon in your hands. And you're going to have to know when you're going to pull the trigger, if you're going to pull the trigger, and why. You know, so Tyler, if you could send your engagement in the private group so I could see it, and of course you can kind of share what you did, right? Try to give an explanation. I'm assuming it was probably from this that you caught that, right? Let's see, the lows at 487 also do look good. Yeah. Yeah, right down into here. Slow right there. Yeah, very choppy delivery getting down there. But nonetheless, price delivered through, got this displacement, delivered from the first presented for value gap. We're below some of the levels we like to see that support price moving lower. DXY is not really being too helpful in this regard. We do see, if we go down and break it down a little bit, we see the regular trading hours gap. If you break it down into quadrants, you could see the 25, 50, 75% level are setting up reactions as it marches towards the London low down here, the 487 level. Or towards that level, right? And then again, if you look closer, you could see those of you that are interested in the continuation variation of, say, the YouTube model, wouldn't you say that this is a run on stops? Wouldn't you say that this is a shift in market structure below the low? And wouldn't you say that that's a fair value gap in there? So there's always going to be an initial move that sets things up. And then there's going to be continuations. And one other thing to add to that, isn't this inside the macro? Isn't that inside the macro, aside from what I just said? It's very interesting how time is so important, right? I didn't execute this, you know, because I have my opinions, right? And what I'm deciding I'm going to be interested in. And because I trust myself, missing a move is not of concern to me at all. Every day I do this. It's every day. So I'm not concerned. It's beautiful to see this taking place like this, exactly how we talk about. And you know, it's nice to see that when certain levels are violated, you know, we know or have a good feeling the price is probably going to continue. And if those things are then violated again, we can rest assured that we're able to get back in line with things as well. You know, whether it's going higher or lower, whether we're in bullish or bearish conditions. But this is a good example of the YouTube model forming continuation-wise in a move that's already delivered, but in a better timing element, farther away from the open, which can be a bit hectic and inconsistent because of the manipulation. right? But this here was a pretty nice move, right? 20 to 30 points, right? Within a macro, all the different things that we like to see in alignment. Aside from the fact that, we obviously been trying to feel this out. Like, how is it going to treat this? And we're not picking tops. So I was not about to take a short up here because I don't pick tops. I don't pick executions that are even close to tops or lows, right? Highs or lows. I'm the type of trader that likes to see it prove itself by breaking through certain levels. And I have no concern about catching continuation moves. That may not resonate with you, but that's something that, that I do. I try to teach you guys to pay attention to continuations. Watch this fair value gap in here. I can say that if we displace above that, that would invalidate the interest for this to want to continue. I think it's going to use that and punch through this one more time. Then we'll see what happens. Yeah, hopefully this is a very obvious view of the continuation variation of, in this case, the YouTube model. I mean, you can also say that this is also a order block. Okay? What are order blocks creating? Those of you that have been with me for a while, why are order blocks important? What is an order block? What is it actually doing delivery-wise? What is it creating aside from just the name an order block, or an up candle that should hold price? What is it actually creating? It's a change in the state of delivery. Okay, that's one thing. That's one thing. Why can that change in the state of delivery be respected, though? Right? Why could it be trustworthy? My brother said creating a new dealing range, which turns into a balanced price range, and you can also couple what Yasin said, which is changing the state of delivery. So it's creating a change in the state, and then it's also leaving behind a balanced price range, because isn't it reasonable to see, or visually pleasing to see, that we've traded buy side and sell side? So why would it need to come back if it's literally just seeking efficiency? Obviously sometimes it'll fail, right? But at the same time, if it delivers both sides like that, that's a reason why when an order block is left, right, and you see this type of scenario take place, it goes up to the midpoint and respects it and then declines. But every time it violates the 50%, which is violating a balanced price range, price a lot of times fails to deliver that order block. And if the order block fails, that's telling you something, right? It's probably going to go the other way, and it'll invert, right? And it'll be a balanced price range the other way once it overlaps it. And this is happening all the time, over and over, right? There's many different variations of balanced price ranges, but that's what these PD arrays are pulling your attention to for the most part. They're identifying different variations of balanced price delivery in the market. That's why they're so responsive. That's why they're so reliable. When you get it correct, that's why it's correct. And then when it's wrong, it's not a bad thing. It's just simply telling you it's potentially going to go the other way. Right? I notice how high, right? We got the low, high, lower low. Right? It should not come back to the 50% of this, because this fair value gap here has a fair value gap that displaced, but to the left you have a low that delivers buy side and overlaps it with this. This should be the only thing that it needs to really trade into, if it needs to trade into it at all. You see how it's having a hard time getting beyond that? It's because this is a rolling balanced price range. because this order block up here was a BPR. You see how it closed perfectly at the center? It's because what we're talking about is what it is. And then again, if it gets disrespected, if it violates that delivery, then you start to consider inversions. DXY is falling. There is a likelihood for that to happen. That's what I would prefer, so that I can get in line with the bullish run, while everybody's thinking that they caught the top and it's going to turn around, right? If we can get displacement above this high, what does that turn this into? This range, this high to that low, if it gets above it, what does that turn into? It's got an inversion for value gap. If it overlaps that, what does that turn into? Turns into pretty much the same thing. You guys know? Breaker, inversion for value gap, balanced price range, right? Inversion fair value gaps are pretty much one fair value gap that gets overlapped by another, right? When two fair value gaps going down and going up overlap, that creates a BPR. That's why inversion fair value gaps are reliable. That's why they hold when they do hold. Now you could see all three of those things would align if we got above that high. And you could just see how it brings you to a very similar place in price. That's why you only need to focus on one PD array at first, right? Because all of them are just different variations. Also, they're, fair value and, whatever else, if you want to get super technical with things. But at the same time, they all have a very similar role. They just look a little bit different. But the way that they behave, the delivery that creates the PD array or the sequence of events that's taking place is creating something. What is it creating? What's it pulling your attention to? It's creating balanced price ranges. That's why PD arrays are so effective. That's why they're so important, because they're like brick walls. And then if you know where the higher time frame's going, you know where every brick wall is and where it should hold or shouldn't hold. And then once those brick walls start getting completely destroyed, going opposite to what you're trying to see, the brick walls are now going to start forming the other way. The balanced price ranges are going to now start forming the other way. And then you'll continue to hold on to that until they start to get violated again, and then start going the other way. And then the sequence of events continues over and over and over. And it's very repetitive. For now, it seems like it's holding in here. Only way we would be bullish is if we get displacement overlapping this and getting above this high. Otherwise, it's just going to continue to drop. I don't trust a short in here. I don't trust it at all, given what DXY is doing. I would much rather just miss the trade than get in there and lose chasing price. It wouldn't be chasing if DXY was rallying up here, right? If it was rallying while price was doing this, it wouldn't be chasing, in my opinion. We are pretty extended in here, so your risk, if you were to execute something that's so extended like this, your risk would be cut in that instance as well. Right? You treat it as a low probability condition, right? Because the likelihood when price does this type of thing, the likelihood of it going against it, just like how it went against all this bullish delivery that's been happening in the last couple of weeks, couple of days, the likelihood of this type of scenario happening is pretty highly likely. Does that upset the narrative overall? No. But even on a lower scale, if we're delivering like this, the likelihood of price trying to pull back into, like, say, this order block, right, up here, which it's now doing, so we're going to watch the reaction here, it's pretty likely, right? We got this fair value gap, right? This one here. If we take this, price is now closed above it, right? Let's see. If it was to close back down below it and DXY was to rally, that would be something I would go on the lower time frame, 1 minute, 30-second chart, and try to see if I could find my continuation of whatever model I have that's present in the chart. I don't know which one is always going to be there. It's going to be one of them. You know, that's a luxury you get when you do end up eventually expanding your horizons to different elements, right? Different tactics. But you, of course, you want to stick to one. And if that one that you're studying is not there early on, you got to force yourself to be disciplined and not take the trade. You know, that's why this takes so long, because you have to learn those lessons, sometimes through pain. And hopefully being here helps you guys not have to go through so much pain, right? And you just, you know, take what's being talked about, see the common sense in it all, and then you just do it right the first time. You know, build the good habits the first time. My brother said there's SMT at the highs in Euro and GBP. Yeah, that is interesting, huh? On the monthly chart. Again, we got to make sure that we're justifying SMT with DXY. At the moment, it doesn't look like it's ready. That may end up taking place, right? It may occur, right? It may reject. We'll see. We have swept out the buy side up here. We'll have to obviously see, but we're not going to assume. Yeah, it may wait a little while, and since this is the monthly chart, it may take a couple weeks for that to come into play. But then again, we got the rate cut tomorrow. That's going to send these skyrocketing. From what I understand, maybe I'm wrong. For the currencies, because these have like other countries involved. I don't think so though, because a rate cut is going to drop the DXY. It's going to drop the yield, and then increase the bond market. So that's obviously a positive, bullish signal. Underlying bullish signal. Remember, I mentioned this gap up here. Seems like that's what price is headed into. Seems like we'll get there. And we got the highs up here as well. The fair value gap up there. So yeah, and we got this displacement here, or this rejection in here, and now it's hitting that, and now we're closing below. That, the only way that I would look for this to go higher and go against the short idea in this instance is going to be if we get above this high. Otherwise, we're going to continue to drop. We still have this to blow out. A swing low down here, run on stops. If it could leave a fair value gap in there, that could be something worthwhile. We are kind of in a time distorted scenario, rolling just outside of the macro, still within 5 minutes after the macro. So it still could be something fruitful. Again, any execution in here to go short is going against what the DXY relationship is. So you just have to submit to that, you know, and if it's wrong, that's going to be why, because things are a little bit skewed, but it doesn't seem like they're slowing down. They're really in a hurry to get down below sell side, which makes sense because tomorrow, again, it's a hugely impactful positive news event. And anytime that rate cuts have happened when we're at all-time highs for the indices, the last 20 times has resulted in 6 to 12 months after being bullish, right? So it's not surprising that they're trying to go against that sentiment ahead of the news event that's responsible for the last 20 times finishing at all-time highs the next 6 to 12 months. Yeah, so we got, again, this fair value gap here. What we got, the low, high order block. Returned into it. What did it do? It left a portion of the fair value gap open. Why? Because this order block is a balanced price range. So it left it open, delivered. Price came up into here. We're inside that fair value gap on the 4 hour. Used the middle portion. Rejected. Created the YouTube model here for continuation. Offered 20 to 30 points in there. And now it's hit the low, the regular trading hours gap. We've swept out the lows. DXY is accelerating to the downside. We've now taken out stops and Asia's low that we pointed out earlier. Got a pretty dramatic trendline liquidity up here, and it's got relative equal highs layered here, here, here. Looks like they're setting the stage for something to really get up there. But first and foremost, they're trying to punish anybody that's in line with the market going higher here before the news comes out tomorrow. So, you know, like I said, the likelihood of the rejection happening, going against the bullishness, it was highly likely. Didn't want to submit to it fully until it proved it. And once it proved it, it's kind of slid pretty aggressively. And correlation has been a problem. So again, me knowing what I've made mistakes on, having the experience that I've had over the last, 6 years-ish, it's, times like this where I would get it wrong, right? It's news events, certain news events trading before them that I would get it wrong, that I would lose. And I would always think when I would go through those losses, next time I'm going to think twice, right? So that's why we've been more cautious this morning rather than trying to be, gun-ho. Some students have taken shorts. Again, what I'm saying is not to kind of belittle that type of opinion or your confidence in execution if you did take a short. Because again, I just laid out the reason why a short made sense. After it proved with displacement, after it got below this level, this fair value gap, which I said if it was going to hold that, would continue to push price lower. I just personally, from my own trading, decided to be on the sideline, right? But hopefully the perspective today has given you guys some value. You should never be worried about missing a setup. Who cares, right? Because there's always something like this taking place. Continuation. Let price tell you what it wants to do, right? When it's super obvious and the start of the move is going to deliver, right, and you're able to catch it, that's great. You don't need the absolute high. You don't need the absolute low. So yeah, let's watch this in here. And pay attention to this up here too. So yeah, this here is the order block that I pointed out. So yeah, with DXY being so aggressive, this is a pretty meaningful run here, sweeping out the lows and then quickly getting back above it. If we could displace above this high, again, we got this high to that low, the fair value gap. If it overlaps it with displacement, could end up creating a BPR. But we also have this high that took these buy-side liquidity pools out, took the sell-side liquidity pool out, which is a significant Asia low. If we get above this, this candle here becomes a breaker, and this may actually be something worthwhile, especially with DXY justifying with the downtrend. All of this could have just been manipulation, and we may even end up closing up here. So yeah, this is something that I'll attempt right here. Still be at half risk, but this is something that would fit, something I would like to potentially participate in. So we'll see if we can get above that. Go to the 30-second chart. We could see a shift in market structure here, run on stops. Now we're above that. Move up a little bit. We do have a little ways it could go. We do got the 50% of that wick in here. But we have tapped into this fair value gap in here. So we may use that and push. and get us back above those highs, especially because DXY is so bearish. It's just falling out of bed. Completely obvious that it's targeting the quarterly low down here. We called this at the start of the week. On Sunday, we said it's going to reach these levels. Has it done it yet again? Listening to what we tell it, yes. It's not luck. You know, it's not guessing that it was going to get down there. We've been holding on to this objective for so long. From that monthly chart, even in the face of this, we were still able to continue to hold on to the buys in the indices and the bearishness in the DXY. So yeah, we're going to watch this here. As long as it stays above the 50% of that, should be good. Yeah, we'll see. Because now DXY is given like a little bottom in there, so it's a bit suspect for this to be something reliable. All right, so price is doing that. It's a little bit more aggressive than I would like. Let's see if it can hold that. DXY has decided to give a rejection here, so that may upset this ability to go higher. We may not be done. It may look to dig a little bit deeper. But yeah, we'll see. See what the reaction is here. If it breaks this low, that's going to be invalidation for this to want to be used to go higher. But it looks like it's, you know, for the meantime, respecting it. So if you took a trade today and you made money, there's no need for you to even be considering anything else. It's not a day to put a bunch of executions in, try to increase, right? If you were able to get 20 to 30 points, that's all your objective is. This right here may be a problem. If it was to go up there, it may stop it, right? It may give it a hard time if it was to go. But we got to watch what DXY does here. Again, if this is lost, I will save the stop. I won't let it blow it out completely unless I'm forced to deal with it. It's a very small stop, you know, a little bit over 1-to-1. My model is in play. So whether it wants to come up here and continue all the way up here or not, doesn't matter to me. I just want to see if we can get it up to 20 to 30 points, and that's it for me personally. And if you took a trade, you should not be executing anything right now. That's the rules for days like this, ahead of like a rate cut or FOMC, NFP. If you make money, save the money. Because most people probably lost, right? Shit, I may lose here, right? You don't want to engage more than you need to and turn a profitable day into a negative day, even if it's, you know, very small. So we're going to want to see this slide on through this order block. The longer it holds in there, the less reliable the move higher is going to be. And we want to also see DXY break down here. Yeah, we're working within this order block, this low to that high. Yeah, we'll just wait and see what happens. DXY sure looks like it wants to support this move into the buy side. Currencies are moving to the buy side. Everything is supportive of that breaker going to the buy side. Right? So we have a lot of stuff on our side here, except the fact that we're a day before the crazy news event that could just shake everything up and not let anything take place in a meaningful capacity. 20 to 30 points may be realistic. We'll see. I don't like how we're stalling at this order block. That is not something we like to see. We need it to blow through opposing PD arrays. But yeah, let's see how the reaction here or is here above the breaker high up here. It's got an order block there too. All right, so you can imagine if this was going to be bullish, if it's going to be worthwhile, this is going to have to stay above levels like this. It's going to have to respect levels like this wick, the midpoint. If it blows past that, this idea is clearly not going to be something that you want to be a part of. Right? Just as it won't be something I want to be a part of if it breaks past. Honestly, if it closes below this midpoint, I'll save the stop even further. Right? Because that's not at all the reaction that we want to see price have. DXY is now kind of denying what we want to see. That's supportive of this going higher. And then again, if it breaks down below this low here, this wick to the high, right? So this low to that high, that will create the scenario that may send price even deeper to the sell side. So then an adjustment could potentially be made reasonably to see price try to get down even further. And then this low to that high may create a bearish breaker. All right, so now let's see what the reaction is going to be here. Again, if it can't hold that 50% of this wick in here, which is right there, if it can't give a strong movement and it gets too deep into that wick, I'm going to save the stop and take the, like what, 13, 14 point loss. So we could see it a little bit better. So now it's tapping into it, so it's going to have a quick response. All right, and I'm going to give it a little bit more grace. Let's see. But yeah, that's a little much for me. All right, I'm about to save the stop. Okay, so I saved the stop there. And what was it? 11 point loss. Nothing too crazy, right? But yeah, we'll see what happens in here. All right, and then again, if this wasn't a day that has a news event that it has tomorrow, the only way that I would look to participate again is if we can get back above this breaker and then possibly use it again in like a reclaimed fashion. You see how it took too long and it spent too long in this opposing order block, the bearish order block here? That's a sign, right? If it can't just quickly, smoothly ride on past it, that's a sign that things may not work out. Right, and you just saw that, this was a time where it aggressively repriced back into this little range in here and didn't work out. But the model showed up, right? And when it shows up and looks reasonable like it did with bearish DXY and everything else, you can't have fear. You can't be scared of taking losses. You know, none of us are perfect. We're all going to take losses at some point. So yeah. So we're in time distortion right now. So we'll see what happens. Right. Again, if it breaks down below this low, this wick will create a BPR. But again, that's going to be inside the context of this literally being sideways. Also having a pretty nasty cracking correlation here with the DXY. And then again, I would not even attempt to re-enter or take a short or anything until we see what happens going into the 750 macro. See, I wouldn't be surprised if this is going to be the vibe that they're going to carry on with. Because again, you got to remember, they're going to try to build as much as they can. Even the AM session tomorrow is probably going to be a bit nasty. Probably a lot of skewed signals happening. Like it'll show one thing with a bunch of different assets, and then all of a sudden it's going to do nothing or just do the opposite of what normally happens. And it's going to be done to build up sentiment. Because again, when that news comes out, watch the candle that comes out when the rate cut is announced. Just watch. Just watch what they do. They are going to absolutely crush anybody that stood in the way. Or anybody that, you know, thought they can get ahead of it and think they're smarter than they really are. It's going to absolutely destroy people. Some people may get lucky. But my assumption is tomorrow is going to be a bloodbath in the market for day traders. So yeah, it's kind of just stuck, right? Kind of just stuck, not really interested in going anywhere. We'll see if that changes. Again, we will make a decision closer to the macro. For now, we'll be sitting on our hands watching these levels. What time frame was that order block on? 2-minute. So we do got this order block here too. It's just nasty. It's definitely range bound. So again, you don't want to push your luck in this right now. What's happening with this? Let me go check the chat. Euro, USD. Higher Euro, lower DXY. Yeah, the relationship is, I believe, a lot more reliable with the currencies against the DXY. For whatever reason, I think they're now trying to push back on that. We do got relative equal lows here. This is kind of, I mean, that's potentially something that can take place. If we go, we can't even, oh yeah, we can, right there. You can see that huge regular trading hours gap, because these are futures for the currencies, so they have regular trading hours gaps too. So yeah, there's still a ton of liquidity down there that it could reach into. There's a void of liquidity, right? It's just a massive gap. Well, looks like wait, TikTok? There was a TikTok deal recently? Oh yeah, what the hell happened to that thing? Yeah, Oracle, huh? Yeah, it could have an impact. I think it's more or less what's happening with the federal fund rate. Because again, currencies chase yield, right? So what the DXY does is heavily dependent on what the yields are doing, right? Which, you know, as you guys can see, we talk about it all the time, this, right? That's the yield, right? When they cut interest rates or increase interest rates, this is what it impacts right here. This specific interest rate. This has to do with a lot of things like mortgages and stuff like that. You know, heavy things that have to do with business loans and all kinds of different stuff. So it has to do with business. So that's why it's so impactful, and why, you know, I'm saying it's going to be very, very heavily influencing what happens the rest of the year based on what happens tomorrow. And it's not reasonable for them to want to smash this lower, right? Like I talked about early on, for them to try to pull in the opposing side and get people that are not aware of what this rate cut is potentially going to do based on history, but also just based on just like fundamentals in general, where if you cut the interest rate, that drops the yield, which drops the DXY, which explodes other assets. Right, so them pulling this as aggressive as they're pulling it today with the indices, I mean, if you were smart money, what better way to hide what's to come than to do the total opposite? And honestly, it's not out of the realm of possibility for them to have done this decline, right? This, now that I'm looking at this here, I could see this consolidation being a market maker sell model. It didn't pop out to me earlier. This right here, I mean, we already took this out It's probably why it kind of slid quickly. Once it got down below this 4-hour fair value gap, I don't know how that didn't pop out to me. Yeah, this is a market maker sell model. Right? Got the consolidation, accumulation, reaccumulation, smart money reversal here. Balanced price range, shift below this low, creating an order block bearish, displacement, right? So accumulation, the two accumulations over here. We got the distribution, second stage distribution, and it quickly got down below the original consolidation. So yeah, they may not even really fully be done. Like they may end up coming down to there. I think that may be a little too overzealous. But who's to say that London doesn't get us down there? All right. Okay, so now we just got a displacement here. So yeah, watch that fair value gap in there. Watch this little fair value gap here. Clearly it's respecting the order block here. I mean, it's just absolutely stalled out at that level. The breaker failed, right? I mean, it definitely brought us back to the point where break even could have been something. But I mean, what the hell's 11 points? That could be made back in 10 seconds. But yeah, this here, if DXY was to run higher, could be something reliable to try to get down there. I would not execute this stuck in this consolidation. I wouldn't do it. And again, if you took a win today, you take that to the bank. Okay, you don't push anything in this because we've clearly now turned into high resistance delivery. The only way that something may be reasonable to think about is if we blast through this low, DXY just explodes to the buy side, and then this turns into a bearish breaker. This low to that high, take the down candle, possibly something like this. And for potential buy side scenario, right, if we did see something trigger in the interest to go higher, like bearish DXY, displacement above the high up here, we could then take this high to that low, right? Once we break above that high, we could look at that as a bullish breaker and then try to use that. But again, it would have to slide through this pretty nicely. It can't do this stalling nonsense. Otherwise, it's not worth it. Like if it was to break this high and then be slowly creating candles, even if I executed, I probably would just be like, whatever. Tomorrow's what tomorrow is, and we're going to wait to see what it does going into the rest of the week. Because it's only Wednesday tomorrow, right? So then we got Thursday. Friday is probably going to be low probability because there's no news. Automatically, you think low probability. Right. So, yeah. Unemployment claims, for those of you that don't know, is my favorite. It's got just enough volatility. It's a very, very reliable news event. But yeah, this is just a mess. So yeah, we'll see if it can get down into here. So I'm looking right here, see if there's any gaps. It's pretty nice. Look at how beautiful that is. How it's such a strong level. Seeing price do this at particular levels makes me feel like this is accumulating in this level. With DXY falling like that too, I mean, it makes it even more something I'm interested in, right? And just like kind of watching how it's going to deliver. How does it deliver from here? Does it just break down? In that case, it accumulated for shorts. We've already kind of fulfilled this market maker sell model. Maybe it wants to blow down below this, reach down to the deeper 1 hour fair value gap. Now, that is also a possibility. It has given a huge displacement off the high. We have inverted these levels in here. Very much overlapped this fair value gap here. So this could very well act as a balanced price range. All right, but again, if that was to fail, that would be triggering in our interest to target the buy side up there, right? So what has price done here? All right, we've taken external range, created all-time highs. What did it do as a result of that? We took external, and then now we're seeking internal range. We took out highs to then reach back down into inefficiency or a discount. So once it fulfills whatever it's trying to fulfill in here, remember when early on I said if it breaks this fair value gap, these lows will all become targets. Has that happened? Yes, it has. Now we're kind of stuck here accumulating in this level, which, you know, seems like it still could have a ways to go. It could reach down into there. Right, we are inside this. So this is a fair value gap too on the 8 hour. You know, and then of course if it blows this out, that sets the stage for this, and it'll probably get there very simply. But yes, let's go look at the lower time frame. Hopefully that higher time frame makes sense. Hopefully you guys are calibrated to what is available on that time frame, the 4 hour, 8 hour. How that's going to impact what it is that we're seeing here on the lower time frame. My brother said we're still in a pretty deep premium. Yeah, you're absolutely right. You're absolutely right. Because that's the case on the higher time frame, it makes it a lot more risky to take buys. Right? Doesn't mean it won't have something that could play out if it's like overwhelmingly bullish, but because of the news tomorrow, I don't see overwhelming bullishness taking place until tomorrow. Because remember, large moves on the higher time frame need institutional sponsorship to back it up. What schedules institutional sponsorship behavior or engagement? News events, red folders, orange folders, not yellow folders, red or orange, right? So yeah, let's watch this. We're going to observe how price is going to treat this. I can say that if it overlaps this and uses it as support and we can get DXY to fall, that may trigger in another run back to the buy side up here. Maybe come in and try to attempt this a little bit more. But again, for now, we're in very low probability, sideways delivery, and we have to submit to the reality that that's what it is. Otherwise, you know, you're going to go in here and try to force things and blow your account, and then once you're done with that episode of overtrading and blowing your account, you're going to look back at this and think, wow, I should have just not did anything, right? And I would have had the account still if I just didn't do anything. The loss would have been less if I just didn't do anything. I could have kept the small win that I had early on if I would have just stopped and did nothing. Right? So these are all things that are constantly running through people's heads when they have a bad result. And it's even worse when you caught something like a couple of you guys did here when we talked about it. I mean, wait a minute. Sorry, I have to go check something real quick. Totally almost forgot. Just totally blindsided me right now. Wait a minute. Sorry, give me 1 second. Sorry, I totally forgot to do something. Okay. Ooh. Yeah, sorry about that. I had something going on with Apex with my ID, and they were threatening to not let me trade or take a withdrawal. They're like, you could trade, but the ID problem needed to be solved, and I forgot to check it this morning because I have like a long name, right? And I put one of the names, and they saw my ID, and they're like, wait a minute, what's happening here? Are you like impersonating someone or doing this or doing that? And I'm like, oh crap, I need to prove it. I've been waiting on their email, and I just went and checked because they were going to send it this morning, and they sent it. So luckily that's solved. Yeah, that just blindsided me. I'm sorry about that. I had to go make sure. It's time sensitive. But yeah, so what was I saying? Yeah, I totally don't even remember what I was talking about. Do any of you guys remember what I was pointing to before I got blindsided by I'm gonna go check that real quick. We're approaching a macro. Yeah, we're approaching a macro for sure. We're actually in the macro now. So if we can get this to displace above this and invert that with DXY bearish, that may set the stage for us to give one more attempt to go higher. News events for tomorrow. Yeah, so yeah, we got the crazy news event for tomorrow. Lots of chaos. The early session, because this is so late, expect the AM session to be a shit show. It's not going to be something probably worthwhile. Maybe it is, maybe it's not. It's a hit or miss tomorrow until we get the damage that's going to be caused, or see the damage that's going to be caused by FOMC mixed with the federal fund rate. When these two are together, the duo is bloodbath. Okay? Anything that you think you know, you're probably going to be proven that you don't know. You know, because it's manual intervention. It's when the big money is going to come in and start to play games, and they're going to try to hurt people. You know, that's what it is. This whole decline in here, imagine how many people think that the market's now going to probably fall off the face of the earth. Oh, the world's ending. U.S. economy is going to zero. There's people probably panicking because this was such a strong move. You know, panicking in some sense, right? And that's going to bleed into tomorrow, especially if this ends up dropping a little further, deeper into the logical areas that we just painted from that higher time frame, which is the deep 1 hour fair value gap, or the 4 hour. I think it's also an 8 hour too. Yeah, we got an 8 hour down there. Right, so the only way that bearishness kicks into full gear for me, if I was just looking at this time frame, I would need to see this low get violated. That would turn my attention away completely from bullishness, and this would be a break in market structure. If we go to the daily, you could see that it's also, it would create a bearish order block and a balanced price range on top. And then as long as it stays below the midpoint, if we were to get down below that, I would continue to target down to these levels. But again, if that doesn't happen and it stays intact, and this high to that low continues to respect the 50% level, because this is a BPR as well, traded both sides, buy side, sell side, and then displaced out of it, right? As long as this low stays intact and the 50% of this level gets respected on this daily chart, we will continue to see price move to the buy side. Right, again, doesn't mean that there's not going to be retracements like we've seen today. This is healthy. This is what you want to see, because we're at a high premium. Do you want to buy things that are expensive, or would you rather them go down to a discount, go to a cheaper level, and then buy it? I mean, you could think of it from commerce as well. You know, like if this was a product you're trying to buy, wouldn't you rather buy it when it's a little bit cheaper? That's all this is showing. When it's super expensive, all-time high price, and then when it gets down to be a little bit cheaper relative to where price was at. You know, and when it's high and you want to make the most profit, if you were selling a product, you want to catch it at a premium, right? Figure out a reason to sell it, right? And then when it's in a discount, in this case a discount PD array, below equal lows, sweeping out some form of sell side, that's when you want to observe where your model is, and then try to execute buys when you're at a large discount, or try to execute sells when you're at a large premium. So you could look at things in terms of premium and discount from that way as well, and it makes it make more sense why you want to buy in a discount, why you want to sell in a premium. You know, what buy low, sell high really means, right? And the PD arrays in a discount, PD arrays in a premium, they give you visual representations of some of the best prices to consider potentially engaging, right? So yeah, hopefully that makes sense. But yeah, so although we're inside this macro here, we're sideways. I took a loss here, which I walked you guys through. We saw this high, that low, got traded through pretty aggressively. Watch this order block here. It failed to slide on through it as we took an execution, or as I took an execution in here. Price came back down. I showed you guys, or explained to you guys what I was going to do to manage this trade. It ended up breaking through levels that I didn't want to see it break through. So instead of having the stop where it was initially, to kind of let the trade breathe a little bit, we ended up saving the stop, saving like 6 points. I think I had 20, right? I think I had 20 points. So we ended up saving like 10 points. And this way that we did this today proved to be helpful, right? You don't want to take a bigger loss than is necessary. And if you understand, you know, what price is doing, which we do, even when we're wrong, we understand what's happening. You're able to then save your stop. And then you eventually, you know, you'll not feel bad about getting out early. You're not getting out early for no reason. You're getting out early because you know what the hell is happening, and you're keeping your losses small. Right? So then tomorrow when we come back, and if there's something to engage, maybe there will be, maybe there won't be because the news is later. I may do a live call tomorrow for the rate cuts here on YouTube. I'll do an early one with my private group, but I may do a video around the rate cut so that we could watch it together, see what it does. I'll let you guys know if that's what I'm gonna do. But going into this macro here, the 750 macro, clearly it's not interested in doing much. DXY looks like it's opening up, continuing the down delivery, which is what I favor. We're not really seeing much of a reliable response here supporting that idea. So again, it just seems like they're holding the indices. Of course, after they completely dropped price to come and sweep people out below Asia's low, which we talked about earlier. And once it did that, it came right back above it, and now we're stalling out. So yeah, let's see what happens with this delivery in here. If we get above this high, watch this fair value gap and see if it'll act as an inversion. And then this inversion, if it was to get above that, becomes invalid if it was to close back down below the 50% of it, right? If it's above it and it stays above it and doesn't even attempt to get the 50%, it'll probably continue to hold, and then we may see price give us this little retracement targeting this high. And then maybe it'll get stuck inside this again. I don't think it's likely that they'll come back up here. They're probably going to save this. Remember, the last 20 times we've had a rate cut at all-time highs for the indices, the last 20 times it's finished the next 6 to 12 months at all-time highs, basically being bullish. You know, that historical data has a 100% strike rate. Not much is 100% in the market, but this right here, right, the rate cut, which is why it's so important, has a 100% strike rate in terms of bullish influence for the stock market. Doesn't mean every day is bullish, right? Obviously, but the overall sentiment is bullish when you're thinking about the rate cuts, right? But yeah, so now that it's 8 o'clock, I mean, this macro looks like it's potentially going to respect this fair value gap. Maybe attempt to get a little bit deeper. But because we're now beyond 8 o'clock, which is generally my cutoff, because now we're approaching the lunch hour, the beginning of the lunch hour, I don't generally like to take trades around this time, especially after we've come off the heels of something like this, ahead of a news event like we have tomorrow. I like to cut things around this time. So I think that's what we're going to do. Definitely watch and see what happens. Let's see what it reaches for down here. Remember, we have the 1 hour fair value gap down there. See if that could be something influential for today or for the rest of the day going into PM session, do the lunch hour. When we do go into the lunch hour, you want to keep tabs on the high and the low. For those of you that pay attention to the PM session, you're going to want to make sure that you watch the highs and lows that are formed, the extreme high of lunch and the extreme low, because whatever price is going to do, those are going to be used as influential levels. And if we're going to be bearish, the lunch high going into PM session may get ran before it drops. Or if we're going to be bullish, the lunchtime low going into the PM session may end up being swept as opposing liquidity to basically pair orders with smart money buy positions to go higher. Okay, that's generally how the lunch hour is used for the most part. And then of course, you know, you got the last hour. There's a couple macros in that. You got the last hour macro overall, like the very last one, right, which is like the 10 to 20 minutes prior to the close. That's called the market on close macro. And then every last, or first 10 minutes and last 10 minutes of every hour in the PM session. It's very similar, right? Every hour has a macro. And then there is 12:15 to 12:45. That's also a macro. AM Pacific or PM Pacific Standard Time. There's, I think, 10:15, if I remember correctly. 10:15 to 10:45 has one. And then of course just the typical last 10 minutes and the first 10 minutes of every hour. Those are macros for the PM session. The last hour has a couple different macros, right? So I think there's some that I'm missing. There's like two that I'm missing. I have to go back and check. But the ones that I just mentioned, you'll see the delivery, the behavior that is caused around those times. So, and remember, I'm operating on Pacific Standard Time. So you're going to have to do the conversions and whatever, right, to make it align properly, right? But yeah, that was a pretty nasty move right there. Of course, what time is it happening in a macro, right? Did price break outside of the levels that would have kicked me into bullishness, that being this inversion for value gap? No. So was a buy considered in here? No. Right? Prices just continue to drop. All right, so yeah, because we are going into the lunch hour, and generally I close around this time, we're going to put a ribbon on it today. Hopefully you guys got value. Let's see how far this can go. Again, we have this level down here that I'm watching as a possibility, especially if DXY gets some legs and finally starts to run higher. I wouldn't really be surprised if they are to use this candle here as a breaker. Lots of work being done inside that breaker, but nonetheless, this is a breaker here. So let's see if this here can deliver price down into this level. All right, but this is the logical level from that 1 hour, 4 hour, and even 8 hour. It perfectly aligns, which is interesting. So that's a very, very reliable target, especially if it overlaps this 8 hour fair value gap. Alright, so yeah. So that's the stuff I'm going to leave you with. Again, let me know if you guys have any questions. Obviously, I'm always just a DM away. Definitely don't forget to like the video if you haven't already. Subscribe to the channel. Spread the word if you enjoy what it is that we do here and you think that it could benefit others. Help me help others by spreading the word and getting people around a community that, you know, focuses on the reality, shows you the reality. I don't always win, and neither will you or anybody else. But how you deal with those circumstances obviously is extremely beneficial, or it could be detrimental if you do it incorrectly, right? If you manage things in a toxic way. So hopefully you guys have a positive influence in regards to those circumstances with your time spent here. And again, I hope you guys continue to give value. Again, I greatly appreciate the time you spend. We have long videos. We explain and talk about a lot of intricate details that get you to be that get you to clarity and understanding. And again, you know, the internet's massive, and you guys spend time here, so I try my best to give you as much value, be as honest and transparent as I can. And I hope you guys see that you know, I've been able to accomplish that. Right? Hopefully, you guys feel that I accomplish that every day that we hop on. Right? But again, thank you for your support. Appreciate you guys hopping on. We'll be live again potentially tomorrow here on YouTube for the rate cut. If not, we'll definitely be live on Sunday. I'll be active in the Discord. And again, with my private group, we're live every day. So for those of you in my private group that have been with me today, I will talk to you guys tomorrow. Let me know if you guys need one-on-ones as well. We could schedule that for tomorrow if you need it. I will be available. But yeah, with that being said, God bless you guys. Hopefully you have a good rest of your day, and I will see you guys on the